In today's market update, we're going to be taking a look at the S&P 500. This is the next video in the series of videos that has been tracking the interaction between price and the 20-day FLD. If you haven't seen the previous videos in this series of market updates, I would encourage you to take a look at that playlist so that you know what on earth it is that I'm talking about. We're also, in today's video, going to take a look at a little more detail about how one might have approached the F category trade that we would have taken as a result of our expectation of the F category interaction. So let's get down to business. My name is David Hickson. Today is the 2nd of August 2019, and as always, I must ask you to please make sure that you have read and understood these disclaimers. So here is one of the analyses that we've been looking at in the past few videos, and if you haven't seen the previous market update, I would really encourage you to take a look at it because I'm going to try to avoid repeating myself too much. As you will know, we had some uncertainty about the position of the 40-day cycle trough and this 20-day cycle trough, and so we have two analyses that we were keeping an eye on. But at the end of the previous market update video, I pointed out that, of course, the next interaction that we were expecting was going to be an F category interaction because, of course, we are tracking the interaction between price and this purple line, which is the 20-day FLD, following the most recent trough of at least 80-day magnitude, which occurred on the 3rd of June. The first interaction is simply labeled A, and then the B category interaction is as price moves back towards the FLD, finds support there. The C category interaction is as price moves away from the FLD. Then the D category interaction as it comes down usually crosses below that FLD, the E category interaction as it crosses back up above that FLD, and then the next interaction is obviously the F category interaction. I explained in the previous market update video that it didn't really matter which of these two analyses was going to be true. We were expecting an F category interaction to occur next, and that is indeed exactly what happened. And so let's zoom in and focus for a moment on the detail of this interaction. I mentioned in the previous market update video that an F category interaction is usually a good, profitable, short trading opportunity. In fact, let's just zoom back out again and explain exactly why that is. The reason is because price, having bounced out of a trough of at least 80-day magnitude, has risen up and formed an 80-day cycle peak, and the F category interaction occurs as it crosses back down below the 20-day FLD on its way to the 80-day cycle trough, which you can see indicated by this nest of lows at the foot of the chart, is expected, according to this analysis, in the next week or two. So that usually gives us a good short trading opportunity. Let's take a look at that trading opportunity in a little bit of detail, because I have received many emails since our previous market update asking me, it's all very well talking about interaction between price and the FLD, but how do we actually approach making trading decisions? So let's spend a few minutes speaking about that. So the way this works, the way in which we approach making trading decisions, is because the FLD line is extended into the future, as you can see, we are able to anticipate a particular type of interaction. Now, some of these interactions occur when the FLD provides support or resistance to price. An F category interaction is an interaction in which we expect price to cross the FLD and continue on its way downwards to form the 80-day cycle trough. And so because the FLD line is extended into the future, for each day in the future, we can look at the level of the FLD line on your chart, and you can know the level at which you might want to enter the trade. Now, I believe that trading is a discretionary process. In other words, you will use Hurst cycles perhaps to gain an insight into what is happening in the market. But in terms of making trades, you need to do some thinking for yourself. Everybody has their own particular trading style and the way in which they like to actually make their trades. And so there are many ways, of course, of trading on the basis of your Hurst cycles analysis. One of the ways that we recommend trading on the basis of this is to actually enter a trade at the level of the FLD. And that is the process that the Hurst signals system that we have recommends. And so what I'm going to do is take a quick look at the emails that we were getting from Hurst signals and discuss the way in which this trade would have been approached. So here is the email for the 30th of July 2019, which was of course for Tuesday. So I'm just going back a day before the interaction actually occurred to show you how this works. When I scroll down to the S&P 500, you can see that there is some text commentary explaining that the most recent price and FLD interaction is probably category E. Well, that's exactly what we were discussing in our previous market update video. Therefore, the next price and FLD interaction is expected to be category F. It's very simple. It's a sequence of letters. It does warn us to beware of a pullback to the FLD. The reason for that is because very often after price crosses an FLD, it will just come back to that FLD just to tap it again before it continues on its way. So when an interaction has occurred recently, you have to beware of that pullback. But I discussed this in previous market update videos, and we were expecting at this point a fully qualified F category interaction. So we were standing by to take advantage of that. Under the opportunity section over here, you will see that there is a trade opportunity, and it is an F category trade, which would involve a short entry. It's a short trade. Notice this cautionary note. It says at this point that this trade might be premature. Now, I'm not going to go into all the details about why a trade might be premature or might not be. It has to do with how much time has passed since the most recent interaction with the FLD and so forth. But it's useful to bear in mind that a trade might be premature, particularly when it has very recently interacted with the FLD. Nevertheless, here is our entry level, 29.88. And if you're trading a derivative instrument, such as maybe you're not trading the S&P 500, maybe you're trading an ETF or something that is closely related, then in fact you would look at the median price on the 19th of July in your particular instrument. As long as those instruments are closely related, and you can derive the price at which you should enter, because that would be the price at which that FLD is on the next day. We have a stop loss level and also a means for deriving that stop loss level. And then we have two targets. I'm not going to dwell on that now, but the full target for the cross over the FLD is what we call the T2 target. It is the cycle target, and you can see on this day that was 29.4790. And so let's go back to the chart, and you can see that on the 30th of July, price didn't come down to the FLD, which was over there. So we didn't in fact have an interaction with the FLD. So nothing happened. So we move forward to the next day. And here are our Hurst trading opportunities for July the 31st, 2019. Let's scroll down to the S&P 500. Here we have the same commentary. There's been no change to the analysis. So the most recent interaction was probably category E, and the next interaction is expected to be category F. Here is our trading opportunity, an F category short entry. Notice that the system is not giving the caution about this being a premature trade anymore. As time has passed, it's no longer a premature trading opportunity, it's a good trading opportunity. And so here is the level of the FLD on the 31st, 29.85, and that is the median price on the 20th of July. There we have our stop loss level, and here is our T2 target, our cycle target at 29.43. Point something or other. So 29.43 roughly is our cycle target for that interaction. Let's go back to our chart again. As you can see, on Wednesday, the 31st of July, price did drop down below that 20-day FLD, which was at that level, 29.85, and that was our F category interaction. Now, there would have been various ways of trading it, as I've mentioned it. Some traders prefer to wait until price crosses down below the FLD, and then they wait for the inevitable snap back, which very often happens, and then would actually enter after the snapback. That's one approach. It's a little complicated for now. We're going to keep things really simple and say that at that level we would have entered into our short trade. Now, you will remember our T2 target was 29.43, so that was over there. It in fact occurred after the close of trading yesterday and in overnight trading before the market opened today. So that's our T2 target, or the cycle target, and the reason it's called that is because that target is calculated on the basis of price moving from the peak down below the FLD and an equal distance below that FLD. So at that point, this F category move has fulfilled its cycle purpose, if you like. So the cycle that is pushing price down has achieved its target. It's reached the end of its trade. Now, that does not necessarily mean that that is the end of this move, and that is why we recommend a money management process that actually involves taking a little bit of profit a little bit higher up. That's the T1 target, and then you take some profit at the T2 target, but then you keep some money in the trade because you still have some contracts on this trade to benefit from a further move downwards. Remember, an F category trade is very often a profitable trade, and it is very often more profitable than the target that we were expecting, because of course price would continue down to form this 80-day cycle trough, and the low point, the point at which it forms the 80-day cycle trough, would of course be your sort of maximum profit potential. So now let's speak about where this trade is going. We are potentially still in our F category short trade. Even though the cycle target has been achieved, we know that there is still the possibility that price will continue downwards. So when is this 80-day cycle trough going to form? Here you can see the nest of lows, which indicates there's the circle for the 80-day cycle trough, and that is, I believe, on the 15th of August. Of course, the range of time is indicated by the nest of lows and extends all the way out to these whiskers. So that is the realistic or possible range of time in which this 80-day cycle trough could form. So we are definitely expecting more of a move down for this 80-day cycle trough to form. In terms of interactions with the 20-day FLD, we will usually see price coming down and then pulling back to the FLD and finding resistance. That pullback is the G category, and then our next trade would be going short one more time for an H category trade as price comes down into the 80-day cycle trough. But now, of course, we have two different analyses, and so there is another analysis that we can look at, which is this one over here, which has a different position for the 20-day cycle trough and the 40-day cycle trough. In my opinion, this is a slightly better analysis. There are various reasons. I won't dwell on them now, but in my opinion, this is a slightly better analysis. But nevertheless, it opens our eyes to the fact that the nest of lows for the 80-day cycle trough is a good week later. Here you can see the nest of lows, and that tells us to expect the 80-day cycle trough to occur in the week of the 26th of August. So in other words, the last week of August. So we're looking at another 3 weeks that are likely to unfold before that 80-day cycle trough occurs. However, you must remember that we need to make use of all the information on our charts, and we must not forget the whisker here of the 80-day cycle, and that whisker or that line is extending all the way up to, in fact, the beginning of this week. So it is not outside the realms of possibility that the 80-day cycle trough could form right now. This blue line here tells us that we are within range of the potential formation of the 80-day cycle trough. Of course, the way in which the shorter cycles have broken down indicates that we don't expect that now. We expect it later in the final week of August. But we need to keep in mind that it is a possibility. So let's take a look at one more thing before I bring an end to this video, and that is the 80-day FLD. I mentioned the 80-day FLD in the previous market update video, and it's interesting to note that in after hours trading this morning, before the markets opened in the US, price came down to the 80-day FLD, and they did in fact just touch the 80-day FLD, as you can see there. I wouldn't be surprised if the 80-day FLD provides a little bit of support here for the market, because FLDs always do, or often do, provide support or resistance. But bear in mind what I said in the previous market update video, that the interaction that we are expecting between price and the 80-day FLD at this point is not for the 80-day FLD to provide support and for price to bounce up again. That is not what we are expecting at all. What we are expecting is that price will drop down below this 80-day FLD on its way to the next 40-week cycle trough, or the next much longer cycle trough that lies ahead of us, which is something that we will have to look at in our next market update as we continue to track the progress of this market. While we have this 80-day FLD on the screen, it would be remiss of me not to mention what recent price action tells us in terms of the bullishness of the market that we have been tracking. You will know that in my previous market update videos, I have been constantly monitoring the state of the market, particularly in terms of the way in which prices interacted with the 20-day FLD. We have been looking at a market that has been bullish. And if you go back over those market update videos, you'll see I often speak about the bullishness that is apparent in the market, because, for instance, price didn't manage to come down to the 20-day FLD over here at around about the time of the B category interaction, and the D category interaction didn't really drop below the FLD, and so forth. So what's the state of the market now? Is it still bullish? It has been bullish, and even in the previous market update I spoke about the fact that the bull was still alive in this market. Now, it's really interesting because the tone has changed. So let me point out two things worthy of mentioning now. The first is that, as we've just observed, the short target for the F category interaction with the 20-day FLD was achieved earlier this morning. It was slightly exceeded. Now, an F category interaction we would always expect to achieve its target. Only in very unusual circumstances would an F category interaction not actually achieve its target. So the fact that it was achieved doesn't say very much particularly about the bullishness or the bearishness of the market. It doesn't mean the market has turned bearish because that target was achieved. Of course, if that target is exceeded and price continues to drop a lot further, then there will definitely have been a bearish turn in the market. But what is of more significance right now is the fact that the targets that we calculated for the 80-day cycle peak, you will remember discussed in previous market update videos, were 30.50 and I believe it was 30.80. We had those two targets. And the fact that price has come down and has triggered the F category interaction, in other words, when the F category interaction occurs, the peak of the 80-day cycle is in place. It has happened. And so that peak occurred over here. I think the level of the high price there was 30.28. And so that peak happened way below the targets that we were projecting, which were 30.50 or 30.80. The failure of the market to reach those peaks and turn down before it managed to achieve those peaks is very significant. It tells us that the tone of the market has changed. And so the bullishness that we've been watching up to this point has been gradually diminishing, and there has been a shift in mood in this market. This market has changed from the perspective of a 20-day FLD from being a bullish market to being a bearish market. I do hope that you found this market update interesting. If you have any questions, then please don't hesitate to put them in the comments below this video, or send us an email at info@hurstcycles.com or info@sentienttrader.com.